Hello and welcome to today's webinar on a unique time for red meat, positioning your business in the current and future market. My name is Kathy Mulligan and I'm a Livestock Development Officer with Agriculture Victoria. And with the help of Redback Conferencing, I will be facilitating today's webinar. This event is brought to you by Agriculture Victoria's Better Beef program and through the generous support of MLA. Following the presentation, you will have the opportunity to ask questions. There will be a quick short survey following the webinar, which will only take a few minutes, and we greatly appreciate you completing this. The webinar is being recorded and will be made available after today, and we'll send you all an email with a link to notify you about that. If you experience any technical issues throughout the webinar, you can ring the number at the bottom of the page for support. I'd now like to introduce you to our first speaker, Jason Strong. Jason is well recognised as the Managing Director of Meat and Livestock Australia with a passionate commitment to the industry. He has strong skills in commercial and industry business management, as well as extensive red meat and livestock experience. He has a comprehensive knowledge of supply chains from the farm through to the end consumer in both domestic and international markets. Thank you, Jason, for making the time to speak with us. Over to you.
Thanks very much, Kathy, and good afternoon, everybody. And certainly looking forward to spending some time with you this afternoon and talking a bit about the new environment that we're in and some of our current challenges, and I think some perspectives around what's already happened in some of the international markets and how we can make a little bit of sense of what's actually happened. And I think one of the things that's important for us to remember at this stage is that every day we get out of bed and it's going to be a day like we've never experienced before, because what we're going through now hasn't been experienced on this scale in history. So one of our challenges, I think, is how do we reconcile what's happened so far and how do we use the knowledge that we've gained so far to try and make some sense of what might be lying in front of us. And I think one of our biggest risks is the amount of prediction or commentary about the future. And I think there's quite a bit of danger in some of what is said about what's going to happen down the track, and hopefully between myself and Robert today we can give you a little bit of comfort about seeing what has happened so far, but also about the broader global picture as well. And we just need to try and manage that risk and temptation of trying to extrapolate single events out too far as to what they mean on a positive and, more importantly, on a negative basis. So I'm going to talk through some high level pieces of information and what we've seen from MLA point of view, and then hand over to Robert to talk about a lot more detail and market information. So MLA has a driver. It's our mission to foster the long-term prosperity of the Australian red meat and livestock industry. And so we're an organisation that was formed out of the Australian Meat and Livestock Corporation and the Meat Research Corporation nearly 22 years ago now. And we do the marketing and research and development for the red meat industry. So the things we're going to talk about today, the current world with COVID-19, and talk a bit about the China experience and what we can actually learn from that, what it means for Australian beef, and then what MLA is doing. And one of the things for us to remember is that while on paper, we're a small fish in a pretty big pond, but in terms of beef production, we're very large export terms. So we're only 3 or 4% of production, but we're an given time, we're in the sort of mid-teens as far as export goes. So we're currently the second largest beef exporter. So because of that focus, it means that we benefit from and are very susceptible to global headwinds, but we're also very susceptible to the tailwinds as well. Making up these sort of slides for the team have always been pretty fun, and talking to the communications group 3 or 4 months ago, we put a slide together about it captured the things that happened in 1998 when MLA was formed. Now we're pulling slides together about what the world looked like 3 months ago, and it seems like the stark difference between now and 3 months ago is nearly the same as what we were talking about 6 months ago compared to 20 years ago. And in January, who could have imagined, when we're in the midst of fires, we're on the back end of the worst drought in living memory, stock markets at record highs, big issues being whether Harry and Meghan were going to be royals or not, to where we are now. And we've had a fantastic break in the season, which has been some of the most widespread rain we've seen for many years. But we've had a unforeseen or unheralded stock market crash, and this massive impact of this global pandemic that's now impacting all of us in one way or another. So in a very, very short period of time, things have changed really quite substantially. And I was saying at the start, one of our risks or challenges is how we actually manage and reconcile the information or the things that happen. And part of what I want to talk about a little bit today is the cycle or the path. And there's some examples we can already point to about how we can overreact or be overly concerned. And when Australia first started increasing the number of people that had the virus, there were all sorts of predictions and comparisons that were being made between Australia and other countries, and largely they were wrong, because even 6 weeks ago, 8 weeks ago, we had the benefit of the experience of other countries that were able to respond to as a country. And the government and the health departments, they responded and started responding very, very quickly. And many people have got criticisms about how those things were done, but it meant that we didn't follow anything like the path that other countries followed. So 6 weeks ago, it was easy to predict when we only had hundreds of cases. People were predicting projections that replicated China or Italy or Spain or other countries where we're going to end up with tens of thousands of cases in no time at all, and the sky was falling. But as a country, we reacted a lot quicker, and even today we're still at less than 7,000, and we're 6 weeks down the track. So the situation for us is very much more under control than it was in many other countries, because we've been able to learn from their experience, and that's something we need to take into consideration at a commercial level as well. But what we're talking about in this slide here is the cycle, and we'll talk a bit about the cycle with China as well, where the shifts follow a similar behaviour, and there's this process or set of activities that we go through, and we see the consumer behaviour shifts and these event markers that are attached to that, and this sort of information is has come out of the Nielsen survey. So it gives us some guidance about how the population or how the consumers shift through something like a pandemic, and what are the markers or the things that we can look at that guide us through that process. And there's quite a bit of detail in these sorts of slides, but the reason for using them is that there's actually more structure, or there's more predictability around the process or the cycle than what we might think when every day we get up and there's the next pundit that's making pretty dramatic judgments or assessments about what is or isn't going to happen next. what we have seen is some massive shifts as far as demand goes, as far as the impact on our supply chain. And so this is a picture of a meat cabinet at Coles supermarket. We've seen plenty of these pictures come through all sorts of forms, whether it started out with other products and the infamous toilet paper purchasing, through to hand sanitizer, then tomato-based products, pasta, rices, and red meat. And of course, there's also those great heap of pictures where there's no red meat left and there's all the plant protein left on the shelf still, and everybody's had a fantastic amount of amusement or comfort either way from that. But just as a side, what that does demonstrate is that all of the data that we've had about the positioning of red meat over the last 10 years has actually been pretty accurate in relation to alternative proteins, and the hype that we've actually seen so often in commentary and the media has been really overblowing or misrepresenting what's been happening. We've got 10 years worth of data that says the increase in veganism and vegetarianism in Australia over the last 10 years has gone up by less than 1%. It's still less than 8% of the population. 15% of the meat eaters tried it at one stage, and they last less than 12 months. So when things get tough, we've consumed or purchased twice as much red meat as what we normally would, or more than twice as much red meat than what we normally would through February and March, and about as much of the plant-based proteins as you would expect, which was less than what they had been planning for. So we've seen a significant shift in our supply chain, and we've had extraordinary demand, and it's created these unfortunate concerns and unjustified concerns and really irresponsible commentary about food security. And I think the NFF's done a great job in the information they've provided to the broader population with some TV adverts and billboard advertisements and quite a bit on social media, quantifying the production or food production in Australia. And we produce about enough food for 75 million people. There's a few items which we don't produce all of our supply, but they're not showstoppers. They're certainly not red meat. And there's absolutely no issue as far as food security goes whatsoever in Australia. But what we are seeing here is the impact on the supply chain. So being able to respond to a massive increase in demand and being able to keep up to a more than doubling of demand at a time of year when it's normally one of our lower supply times. So these sorts of things have a massive impact on our supply chain, and how do we actually best respond to those is what becomes important. So a lot of what we're looking at is new ways to get to consumers and new ways to get product and information out to them to respond to that. But we've also got to remember that this isn't normal. So next year, March and April aren't going to be bigger months than Christmas, which is what this year's were. So Christmas is December is the most important sales time for red meat, and February and March, were more than double what the Christmas or December sales were last year. That's not going to be the same next year. So it's about how do we respond to this immediate demand. It's not about how do we completely tip our system on its head to change in response to this. As part of the supply chain shift and shutdown, as it would be, we have some flow-on effects. And one of the big ones we have at the moment is driven by food service. So about 70% of our red meat is exported, so 70% of sheep meat, 70% of beef, and about 2/3 of what we export ultimately ends up through food service channels. So if you shut down the food service channels, which has happened progressively around the world and will continue to happen progressively around the world, we largely shut them down and you end up only with takeaway, so you have much smaller volume going through those channels. It has a huge impact on disruption on the flow of the supply chain. It's temporary, right? But it it is very impactful now. And so our supply chains that were set up to supply our steak items into our food service sector in February and March and April and even May this year are significantly disrupted. But it's not a permanent thing. It's a big disruption now, but we've had a 15 or 16% increase in the proportion of sales of mince, for example. So we've had a massive increase in those easier to cook, easier to prepare products, and it's not just driven by price. There's been significant premiums being paid for those products as well, but a much larger percentage of carcasses are also being put into trimmings as well. So while we've got this massive flourishing demand at retail, we've got a real challenge on the food service side. So part of what we're doing with our activities in the market is shifting some of our promotion and support to utilising product which people are buying more of. So how do you freeze items? How do you then use frozen items? How do you think about recipes for mince and sausages and alternative cuts? But also some promotion about high value items as well. So people who largely wouldn't have bought steak cuts previously because they might have been more expensive or they had an alternative option. The differential between what's been perceived as those lower value items and the high value steak cuts is now much smaller. And people who would have gone out and bought a steak, if they want to have a steak now, they're going to have to buy it and cook it at home. So being able to help people think about that change in their purchasing pattern and put some support behind those items that otherwise would have gone to food services is an important part of what we're doing. As part of our shifts, I'll come back to what Emily is doing a little bit later on, as far as some of our marketing activities are concerned. I just want to quickly talk about the China experience and what we can actually learn from that as it sits at the moment. And there's a few different ways of talking about this. So there's different terms that are used, but there's effectively a series of phases that we're going through as part of this pandemic, and China's coming out the other side. And for instance, where all the MLA offices are currently shut except for China, so everybody's working from home, except for our China office, and they've actually been back in the office for about a month. Reports this week about 80% of Chinese manufacturing is up and running, and I think Rob will talk a bit about exports and volume, so I won't talk about those numbers. But China's coming up the other side, and we can see that there's progression. So they went through this first stages around the shock and reaction, so the panic purchasing. The consumers are driving their purchases with less price sensitivity to stock up on items, and I think other countries are learning from that. If we get shut down like China was shut down, then we've got to make sure we're prepared for however long a period of time. But also the shift away from eating out, and either the closing down or the reduction in traffic into food service makes a big shift in where product comes from. China, of course, also had a big impact with the closing of things like their wet markets and their other routes or other channels for getting product to their consumers. So it really tipped on its head the supply chain and the channels to the consumer in China during that period. So we saw a really dramatic impact very, very quickly. But interestingly, it then started to recover, and it started to recover reasonably quickly. So once it got through this sort of lockdown and adaptation stage and prepared for getting out the other side, and in the lockdown and adaptation stage, the challenges then arrive around logistics, around how do you actually keep the supply chain full, how do you respond to the different demands in different parts of the supply chain that otherwise you mightn't have been prepared for, and how do we also then look after or respond to a specific chunk of the supply chain effectively disappearing or being shut down, like food service, for example. But then we've got this massive increase in demand at retail. So it creates a bunch of complexity and disruption for a period of time. Consumers then change, and they're obviously driving that change. So their demands and needs certainly change, but also they get a whole bunch of different pressures put on them as well around cooking and preparation, utilisation of products. So how we actually get information and out to consumers and help them with that is very important. It's been interesting, the discussion and predictions about how we come out the other side. And one other word of caution, it seems like we've got a few words of caution, but we don't know a lot about how we come out of these things, except from what we can see in China, for example, or other countries. Is that starting to happen? But what we've got to be careful that we don't do is compare it to other events. So there's a lot of comparison with the GFC, for example. But what we have to remember is that the drivers behind the two things are completely different. The drivers behind a reduction in food service in the GFC were because people lost their assets and all their money. The drivers behind the reduction in food service now is because people aren't leaving their house. Now, the people who frequent food service a lot, and particularly high-end food service, which is most important to us because we're targeting the more affluent, higher-end food service customers. As soon as they can get out of their house, they're going to want to go to food service. So we've got to be careful that we don't over or underplay the challenge out the other side, and make sure we don't compare it to the wrong thing. The GFC was a disaster, and this pandemic is a disaster. Apart from that, they're pretty different. So we've got to be careful that we don't overreact or react in a way that doesn't allow us to respond in the right way. But in the meantime, we've got some real challenges in how we actually get our product, some of that high value product to market particularly. So in China, food service is reopening, but this is entry to a restaurant. So that's a temperature or a thermometer. Taking their temperature, entry to the restaurant, obviously both wearing masks, but doing what they have to do to get back out into food service and get the system flowing again. So during the height, so in January, February, in China, their food service revenue fell over 40%, and the growth rate, which was skyrocketing, it more than halved. And the majority, so 70% of the restaurants, reported extremely high losses. And the ones that actually suffered the most were the high-end establishments. So the ones that had the higher value, higher priced products. And I think one of the challenges, or the real sort of take-homes, was that the losses from those high-end businesses and those high-end food service outlets outweighed the benefit from newer alternative routes to market, like home delivery, for example. So we can see the recovery that's coming and how that's being managed. Interestingly, we see a photo of someone going into a Chinese restaurant having their temperature taken. You go onto a mine site in central Queensland, the same sort of thing happens there. You get your temperature taken 3 times. So this is about managing a risk, and you put in a risk management plan or program. There's a way that you can actually manage your way within a challenging environment. So a couple of things about consumption patterns in China. So we've done some work and worked with a couple of groups in China to do some impact surveys, and the results were really positive for Australian products. So around beef consumption patterns, over 30% of affluent Chinese consumers reported that they were consuming more beef and less pork, poultry and fish, and only 5% reported a reduction in consumption. So this is during during the peak of the virus over there. And when they look at beef over other proteins, before COVID-19 safety, freshness, and quality were the things that they saw as most important. But that shifted to safety and boosting immunity and quality. So seeing beef as having a high nutritional value and a product that supported overall health and immunity for consumers. The good news as well is that they talked about purchasing even more Australian beef. So 30% increase in beef, but 43% more Australian beef. So the provenance value started coming to the fore, and nearly half of them were prompted to buy larger volumes of Australian beef. And we saw this in Australia too. In February and March, obviously they're buying Australian beef in Australia, but people were shopping more regularly and buying more. So it was more events and more volumes, and the same sort of thing happened in China. So they bought more product more often, and they favoured Australian products when they're actually doing that. Really positive buying more chilled product as well, because China's been very much dominated by frozen product historically, but we're increasing our chilled market. So see Australian product as being safe, supporting their immunity, making them healthy, and seen as a quality product. So there's some real positives for us out the other side of the challenge in the Chinese market. So what's it mean for Australian beef? The world needs to eat, and beef's very much the preferred product, and especially Australian beef. So really positive feedback from the China market, straight after the most intense period of COVID-19, and their willingness to support Australian beef going forward. One of the things that gets lost in the discussions as well is, I talked about January, we go back to bushfires and the end of the drought. We also forget a bit about these overriding global drivers as well. So while the pandemic's been huge in the last 4 months for us, and for us another month or two in front of us yet, for our industry, these underlying global drivers are still there. The current market's really disrupted, and disruptive. But we as an industry, we are actually still in good shape, and we do actually have a lot of positives in front of us. So what are we doing? Largely, our activities can continue on, and that's absolutely what we're doing. As much as possible, we've responded to the disruptions that we've been faced with. We've had to shift around a bunch of our marketing activities. A lot of our international marketing activities involve travel and engagement with end users and stakeholders, and we've had to reposition or shift around the way that we engage with the market. We've actually shifted some of that budget and activities out to next year. The domestic market, we've had to shift around some of our marketing activities with the shift in retail and food service, but also our biggest domestic marketing activity for this year is going to be the Olympics. So we've got half a dozen Olympic ambassadors, and we had a number of programs that had already started being activated at retail and so supermarkets and retail butchers. So we've already had some benefit from that, but all of that now gets transferred out to next year. So that'll be in next year's budget. So we're actually shifting what was allocated to the Olympics for this year across to direct engagement with consumers and responding to the more immediate needs around how do they use a product that they might have already purchased, and how do they think about some of those high quality items that they can now have to buy and use at home, which previously they would have got in food service. We've also had to change the cattle and sheep indicators, the market indicators, because the livestock market officers aren't attending sales physically anymore. So they're capturing all the information after the sales, getting pre-sale catalogues, for example, getting information after the sale, and then working with their networks to understand the markets as well as we can, so we can still be reporting information through, but without having that physical presence, it's making it difficult to get those market indicators out. We appreciate that that's created some disruption, but it's an action that we had to take. But otherwise, we're working through all of our normal project process. So we know some things are going to be a bit delayed, but there's a lot of things we can actually still do and are still working on. And with everybody working from home and not travelling, then all those excuses about reports and administration that were held up because we had other things to do should be now making it to the top of the list. So our expectation on being up to date on a lot of those things is certainly a lot higher on all the staff. We've put together some consolidated resources, and one of the things we've tried to do in this area is use as much of what already exists as we possibly could. And I think one of the challenges for us is the amount of information about COVID-19 is just overwhelming. It's like every company that ever existed felt the need to send every single person in Australia their COVID-19 response plan. And on day 3 or 4, a bunch of us should have got together and said, we're just going to send a note out that says ours is like his. So we've tried to use a bit of a central place. So on our website, there's a COVID-19 page. It's got our statement because we've got one as well. But it's also got links to a whole bunch of other things around the supply chain, border controls, the government programs, and also we've got that mental health and wellbeing page, which we put up there early in the year as well. So the takeaways, I think, are there's a process that we follow through. There's a pattern that we're going to follow through. There's disruption. There's no question there's disruption. Things are a bit wild. The supply chain's still operating. It's still operating very well. Some parts of it are more disrupted than others. There's still fantastic demand for our products. We're doing whatever we can to get information to consumers, and we'll keep working and responding as best we can as we travel through the new world that's going to be post-COVID-19. So thank you, Kathy, and happy to hand back, and be around for questions later on.
Thanks, Jason. That was great, and even though we're surrounded by lots of uncertainty at the moment, there's some really positive messages coming through. So I think will be very reassuring to many of the audience. So I'm sure there's lots of questions for you, Jason, but we might hold them over until the end, and we'll hear now from Rob. So I'd like to introduce you to Robert Hermann. Robert is the founder and managing director of Mercado, which is an independent specialist agricultural consulting service. Robert has in excess of 40 years' experience in agribusiness, including 11 years as a senior specialist with Elders, advising in the marketing and risk management of agricultural commodities. Robert specialises in advisory in a range of key market segments. He is well respected in the industry, especially in regional Victoria, for his professional understanding, insights and analysis of commodity markets. Over to you, Rob.
Thanks, Kathy. It's great to be here to be able to talk about the red meat industry at this time. And I suppose we're all thinking that this is really tumultuous times, and as Jason mentioned, it's something that we've never experienced. But what we want to, I guess, emphasise and what we want to reinforce on the back of the great work that Jason outlined that MLA are doing is that agriculture is about long-term decision making. It's about long-term vision, and it doesn't mean you don't deal with the short term and the issues that come up, and COVID-19 is certainly a big issue. But what we have to do is keep thinking ahead, and we have to keep putting perspective on all the aspects that are going to drive the industry, and that's what I hope to do today. I was actually listening to what Jason was saying, and I thought this slide really fits into it as well. And that is that the Australian red meat industry is fortunate in that we have a lot of information, a lot of knowledge, a lot of facts, and a lot of data. And it really gives us a sound base for our analysis. And our business, Mercado, is absolutely relying on that. But it's not the data that matters. It's really the stories and the analysis and the information that you can extract from that data. And Alan Kohler, as most people who watch the ABC News will know, puts up all sorts of interesting charts and provides knowledge and advice and every night. But behind that, underpinning that, is data, is facts, is the real concrete information that you need to make it count. And that's where Mercado fits, and that's where MLA fits. And I think as an industry, we're fortunate that in Australia that's the sort of stuff, knowledge and data and numbers that we can work to. So that's where we come from, and we think that that's important because at this time, it's easy to be caught up in the emotion. And we don't want that to happen. We want to say, let's have a look at things realistically and factually. So it's interesting, and as Joseph mentioned, we're only a quarter of the way into 2020 and already we've got huge stories, more stories and bigger stories than perhaps we've had to deal with in the past. And from an analyst point of view, that's probably not a bad thing. We've certainly got plenty to talk about. But it's not just the one story. You note there that I've listed 6 factors there. And you also note that we're talking about red meat. We're not talking about beef or lamb or sheep, because by and large, all of those products will be impacted one way or another by these factors. African swine fever is one that I'm going to elaborate on firstly, but I just want to quickly go through the others. The China-US agreement, I think that's looking a little bit like the sports rorts. It was a big story last year in Australia. It's now been superseded and almost swept under the carpet. We'll see how it goes, but we're just not seeing that as being a big factor again, as it was perhaps trumped up to be late last year. Female cattle slaughter rates, I'll talk about that. That's a really important factor, not only for what's happened to the market and the herd, but what's happening in the future. The size of the sheep flock, again, this is a domestic issue, but it's critical in understanding what the likely future demand, price and supply is going to be of lamb and mutton in Australia. Of course, then we've got drought, and in Australia, we seem to be always in recent years talking about drought somewhere, and it does have an impact. And we'll talk about what that meant, but we'll also talk about what the rain means. And the rain is going to have an impact on our supply, it's going to have an impact on our processes, and it's going to have an impact on prices. And then, of course, COVID-19 can't be ignored, and we won't be ignoring it. It's interesting, I had a look at a presentation we did in early January, and we had the same key factors, except the drought hadn't broken then, or we hadn't had the rain on the East Coast, and that was the only negative. And we sort of mentioned, well, just keep an eye on this COVID-19, it's in the background there, it might turn into something. Little did we know. Let's start off by talking about pigs, though. And just to elaborate on, we need to understand what this means in the context of our Australian red meat exports. And remembering our red meat exports in Australia are mutton, lamb and beef. They're not pork to any great degree, but what happens in China with pigs is certainly going to influence us. And so the quick story is that there are about 800 million pigs in the world. More than half of those are in China. And by the end of 2020, by the end of this year, there'll be 240 million in China. So half of their pigs will go. Now, what does that mean? Well, as far as we're concerned, it's all about red meat protein. And there will be a deficit of around about 25 million or almost 25 million tonnes of red meat protein in this year, in 2020, compared to the most recent figures we have of 2018. So that's a huge gap. They won't sit on their hands, though. They'll be doing things to try and deal with that and alleviate that. They will increase beef production to some degree, and you can see on the right-hand side there where we've got some other factors coming in. Chicken imports will go up a little bit, beef imports will go up, chicken production will go up, and there'll be some pork imports. But the remaining gap is 16 million tonnes. Now, 16 million tonnes is a number you can sort of throw away pretty quickly if you like, but it's roughly 7 times the total of the Australian beef productivity in a year. So it's a significant number. And I know I was just reading an article just online then while I was listening to Jason, where somebody is now quote saying perhaps the beef industry is going to collapse as a result of COVID-19. In this age, we'd say, well, who knows? I mean, anything's possible. But the reality is that this deficit of red meat in China is factual and it's not going away. And so that is going to continue to play on this market no matter what else comes into fact. Let's have a look at what it's meant. So I think it was August 2018 when the first news of African swine fever came out of China. And you can see that in 2018, those light green bars there, we were running about on average for exports of beef into China. The average is the dotted black line, of course. And then in 2019, we've suddenly seen this 83% increase in exports into beef. And even this year, in January, February, the March figures are just coming through, but the demand has been strong. And as you heard earlier, China is, because it was the first impacted by COVID-19, it also was able to react with, real strong authoritarian rigour like the Chinese government can and get things under control to some degree. They are desperately coming back at a rate to get back into normality. Now, of course, things can go wrong, but what we're seeing in the facts and figures is that this is still a very strong demand for China for our beef. Similar thing for mutton. Mutton exports have declined this year, but I think we all know that the main reason is that we're probably running out of sheep to slaughter. We've really impacted on that. But mutton has found a really strong home in the rest of the world, in these emerging countries where we're probably a little bit more precious in Australia, where we haven't been eating mutton for some time, and I noticed the pies now don't even contain any mutton in them. But other countries are finding this product is a really good source of meat protein, source of flavour, and it's got the ability to hold its texture no matter what you do with it when you're cooking it. So it's a great product. And those exports were very strong, remembering that in that period was the drought period when we were trying to, the flock reduction was in full swing because of the drought. This product was finding a home, so that was good work. And the same with lamb. Lamb exports to China have been strong, remaining strong. We'll struggle to keep up to those levels for the rest of this year until new season's lambs come through, but the underlying demand is strong. And we'll talk a little bit about price in a minute. I just want to make another point that while we're pointing the figure at African swine fever as being a strong influence on demand, the reality is that we've had this demand growing for some time. And what this chart is showing us is as GDP growth grows, so too does meat consumption on a per kilograms per head of per capita. And that's a really important factor, because what it tells us is that the demand and the growth in that demand has already been there as these countries' GDP increases. And probably the best way to describe African swine fever is it's been the petrol on top of that demand that's just ignited it to another level. I'll make another point also about the Chinese Millennials. And this is the first demographic that coming out in China that has had, the benefit of all their GDP growth. Their salaries have gone up. They are well connected socially to the rest of the world, so they know what goes on in the rest of the world, and they're embracing Western diets as their incomes go up. Now, the reason I think this is an interesting story, because there are something like 400 million millennials in China. And if they're the demographic that's growing in wealth and embracing Western diets, then it's significant. Just remember that there's nowhere near that many people in all of USA, let alone millennials. So it's a significant factor. And as I say, it's a factor that has been at play for some time. And again, COVID-19 will be an interruption to that, but it won't be the end of that factor in a demand sense for our red meat. Let's talk a little bit closer to home, the drought. There are a couple of things that need to be pointed out here. Firstly, stock numbers are incredibly low, and I'll show you a little bit more about sheep numbers down the track, but the last time we had sheep numbers in Australia at this level was at the turn of the 1898 in fact, and the cattle herd is somewhere like a 30-year low. So what it means is that we're really understocked, especially on the east coast of Australia. The other factor is, though, that at the end of this drought, and remembering this recent drought came on the back of the 2013-14 drought. So we almost had drought, a couple of good years, and then drought again. But at the same time, our sheep and cattle prices have remained very strong. Now, for those who have been around long enough, they'll remember the 70s and the 80s when, in other droughts, we had no markets for our old cows, we had no markets for our mutton, and in fact, we were putting them in pits and getting paid by the government to dispose of them. The game has significantly changed, and the big change has been that we are now an export-driven market. As Jason mentioned, 70% of our red meat goes to exports. And the credit for having strong sheep and cattle prices through the drought, in our view, can be sheeted back to the fact that we now have export markets that don't care whether we're in destocking or not. What that means, though, is that restocking is going to be difficult for those trying to restock, low numbers and high prices. So the recovery impacts are going to look a little bit different. Stock prices will rise. Well, that normally happens. Restockers have become active, and that's the case. There's a question around what will happen to restockers' activity if the market softens a bit as a result of of some of the other factors. And we'd like to make the point that even though we have seen the market soften a little bit, they're still at levels that are rarely seen. So it's going to mean that the restockers are going to still be encouraged, providing the season lets them, to keep going and rebuild their herds and flocks to the best of their ability. It's also going to mean that processors are going to struggle. They're going to struggle with both supply and margin. We know that in times of drought, there's a lot of females that are slaughtered. That tends to help them with their margin and their supply. That's going to, by and largely, be, or they're going to have much stronger competition coming from restockers now for that product. And the other thing that's going to happen is that in Australia, we're going to have a very large crop planting this year. The amount of 8 hectares that will go into crop will be at the very high level. And given a reasonable season, we could go from having 2 very poor crops to a record crop. So let's just talk quickly about the COVID-19. There are negatives. I mean, a global recession is not good for anybody, and that was mentioned by Jason. It also, we think that products that have high prices are even more susceptible, and now our red meat has been finding high prices in recent times. There has been some challenges with logistics and shipping and distribution, but certainly we may find that what we thought in the past was a negative, being reliant on China, if China does progress and continues to progress out of the COVID-19 crisis the way it is, then their shipping and distribution will certainly come into line quicker than anybody else, and that could be of value to us. I won't go into any more talk about the low value cuts. I think Jason covered that very well. But in the future, with COVID-19 to be considered, as we said, the red meat protein will still be in short supply. Now, we're seeing a disruption to the restaurant activity. We may be wrong, but I'm in agreement with MLA's view that when we are able to go to restaurants, they'll be under some sort of restricted circumstances, people will go back with a vengeance, and so that trade will come back pretty strongly. Restocking in Australia will continue because the returns are good for running, whether it's cattle or sheep. Certainly, we're going to see in the future that those producers who are breeding stock, who have breeding herds, are going to be in demand, and that's a good thing. We need those farmers to have consecutive good years, both seasonally and in price rise, and so we can build up the herd. I just want to briefly mention wool. Wool is the one that gets hit hardest in this circumstance because it's a discretionary spend, and we're going to see a lot of chopping and changing around what's happening in demand for wool. Pre-COVID-19, demand was quite solid, but we've got low stocks, we've got low supply. Our view is that there's still a question mark over how wool's going to fare in this process, and that's not a good time for the wool industry when we're looking at the wool industry was also looking at trying to rebuild its volume and its sheep numbers. If the market is going to struggle, then it's going to be a bad time for that to happen when it should be recovering. I mentioned the female slaughter ratio, and for those who follow Mercado will know that we really watch this closely. It has a lot of impacts. It has impacts on what's happening in the market at the time in terms of price. It has impacts on supply. It has impacts on processor margins, and it has impacts for the future. And you can see in that first chart, we've got the average of the last 10 years. The grey line is the range. And then you've got in 2014, which was the last big sell-off of the drought before we went into the next drought, I suppose, we're at the upper end of that range. In 2018, we were even higher, which was this last drought we've been in. But in 2019, we've had a record turn-off of females. So the percentage of animals being slaughtered that are cows was at record levels. And two reasons. One was because we had a drought, but the other one was that the price of that product remained very strong through the drought. And so there was an incentive for people just to sell down the herd rather than try and retain them and feed them and I guess put the money in the bank. Now, this year, we've already started at above 52%. I noticed the February figures have just come out and they were just above 50% again. We're still at elevated levels. For reference sake, if the herd is going to remain neutral, so not go up and not go down, then the female slaughter rate sits at around about 47%. So for a rebuild of the herd, it has to be below 47%. So you can see we're way off that. And what that's meant is that in 2017, we started to build the herd after the last drought, but the last 2 years, the herd's dropped away dramatically. And so for any rebuild to happen, then females have to be retained, and that female slaughter rate has to drop. The interesting thing, in one of the things we've been looking at, is the 90 CL price versus the Eastern Young Cattle Indicator. In 2014-15, we saw that meat price, and it's really a mince price into the US, which is a good indicator of general international pricing demand. We saw it take off before the drought broke, so our prices struggled a bit, but they soon took off and caught up. And then through the next drought, our prices again struggled, and the 90 CL took off again, and then once it rained, we took off. So we're seeing that there is strong demand for meat. It just needs to translate back to the marketplace when the pressure goes off of the drought sell-off and the restocker demand kicks back in. I'd make one other point about this particular chart here. In the 2013-14 drought, our sort of price hovered around the 300 cent mark for the Eastern Young Cattle Indicator. This year, in the drought just gone, in the last 2 years, we've hovered around 500 cents, and then a surge in the price recently. So that supports our premise that restocking or restockers will be encouraged to go back in, which will be a great support on the market. Looking at lamb and mutton, this is actually an amazing story, and I'll show you the export volumes in a minute. But what we're really seeing is that each year we're seeing higher highs and higher lows for lamb since about 2013, and mutton has actually been, just an amazing price structure. And what that's done for a whole lot of producers, whether they be wool flocks or whether they be specialist lamb flocks, it's allowed them to set up their businesses on very strong cash flows and build in resilience that should withstand them for a long time. What that keep in mind those prices I've just showed you, because if we have a look, these are the export tonnes. And so even though we've had a declining flock, we've actually exported more lamb progressively, which is a great result. So supply of lamb has been growing despite the low sheep flock. And that's a really strong indicator. If we go back to that price, so not only have we got increased price, we've got increased tonnes of lamb being produced and exported. So that tells a story that the demand and the story for lamb is actually resonating in a lot of markets now. Of course, the big driver has been China. Since about 2011, they've ramped up their imports of lamb, and that's been we've talked about that. It mirrors a lot of this people understanding the product and getting to know that it's available and it's a good product. And then, of course, you've got the African swine fever turbocharging it at the other end. Wool, wool had a terrific run and a lot of sheep farmers did very well. We're now in uncertain times, and I mentioned that. But I want to make note of this next chart, and that is that since about 2018, all the fibre prices, whether they be wool, cotton or synthetics, have been in a decline. And so wool hasn't been on its own, it's been tracking the same way. It's just that in recent times, in 2020, so these last 3 months, with the uncertainty in the global situation, the wool being a higher value fibre and even cotton has been hit harder than the synthetics. So that being a discretionary spend is not a good place to be when everybody's tightening their belt. Just want to focus for a minute on the sheep flock, and those people who follow Mercado will know that we love this chart. It tells us a lot of stories. So the grey area is the period where the sheep offtake is less than 12%. So less than 12% is the grey areas there, and you can see at that time the sheep flock grows when it's less than 12%. So back in the 1990s, sheep farmers decided that they weren't happy with sheep, and the turn-off for a long period of time was in decline, mainly lack of the wool industry falling out of favour, and farmers deciding to go into cropping mainly. But the turn-offs were high. We then had the dry and drought periods, and so we've had this general decline. And it's interesting that if you remember back to the chart I showed you with our lamb exports, at the same time we've been able to increase lamb exports. So it tells us that there's a shift in the Australian flock from being a wool-focused flock to having more sheep that are focused on producing meat. New Zealand's very similar, except they started earlier, and the reason for their decline was they became very fond of milking cows. Now, the reason I put up New Zealand and Australia in this context is there's only two countries that have any significant export impact on sheep and lamb meat, and that's Australia and New Zealand. And both of them are in severe decline in terms of, or at very low levels in terms of their historic sheep flock numbers. So all in all, what that's telling us is that we're not going to have a flood of sheep meat onto the world market. And we have this growing demand, whether you measure it in terms of exports in volume or whether you measure it in terms of price improvements over the years. The sheep outlook, in our view, looks very, very strong. So, Kathy, just finally, thanks very much for the opportunity to speak here. And we're going to take some questions, but what I want to say in conclusion is that this is a time to take notice of the data and the facts, and we're fortunate we have a business like MLA that looks after that sort of information for us. It's important that we have those facts and information interpreted in a sensible and a considered way, and I compliment Jason and his team on doing that. You might gather that we certainly rely on that organisation for anything we do, but I wish all the people who are in this red meat industry The one thing I wish at the moment for you is a good season, because in our view, the other factors are going to be positive going forward. So thanks, Kathy, and I'll hand back to you.
Thank you very much, Rob. So, yes, thank you for your insights there. Lots of data, lots of information, lots of takeaway messages and things to think about. So I'm sure that will generate a few questions now, and it'll be good for people to have the recorded copy of the presentation so they can go back and look at some of those graphs and bits of information that you've provided there. So it is now the time for questions. So we would like to invite the audience to participate and come forth with any questions that they might have. So I'm just going to go into the question area. So if people would like to just type in a question and we can go through them. So there's a couple coming through. Sometimes it's a bit slow for this to kick off, but don't be shy. We won't be necessarily identifying people with the questions, so it's an opportunity to ask anything as long as it's on topic. So there's a couple here, and I'll just start perhaps with I might start this one with you, Rob. It's sort of a two-part question. And the first part is, if global demand increases where it exceeds supply, what pressures do you think this will put on Australian livestock numbers, and will producers be tempted to cash in?
It's a really good question. I think, and there's probably a couple of answers to it, but what we think farmers do is when the outlook is positive for markets and the season allows them to, they build their businesses. And we've seen that for years, and we're going to continue to see that, we think. And there's a number of ways they'll do that. One is that the more adventurous, the more professional, the more, robust businesses will grow. But you also, and grow and invest in bigger properties. But you also find that, I think that when we see prices at these levels, remember we were seeing lamb prices, lamb indicator at $7 and $8, and the Eastern Young Cattle indicator at high levels comparatively, then people will invest back in their breeding stock. Because if you're going to, farmers are very smart at working this out. If you're going to participate in good meat prices, somebody's got to breed the animals. And if the good meat prices are there, the incentive is to breed animals. So I think that we will, and Jason made a really good point earlier, we're a small fish in a big pond. So what happens here in terms of supply, we found that out in the last drought. If we oversupply the market by slaughtering because we're in drought, it doesn't matter. If we undersupply the market because we're herd rebuilding, it won't have a really big impact on the world markets, but it will mean that our farm businesses, our red meat, sheep and cattle businesses will grow and will prosper. And that's a good thing.
Great. Well, you've sort of, the second part to that question was what will this do for the future of the livestock industry? But I think you've addressed that with your answer, Rob. So thank you for that one. We've got another one come in here. Given the decline in the demand for service industry red meat cuts and the likelihood of a global recession, are we going to see an overall drop in demand for premium Wagyu and Angus products? Maybe Jason might like to handle that one.
So, thank you, Kathy. This is one of the challenging things to predict. The short answer is in the immediate term, yes, and we can't dress that up any other way. We're already seeing the impact on line items and steak cuts, and talking to a number of the higher end producers, we are seeing that impact on demand. that's a current disruption. The food service sector will bounce back, and it will bounce back quickly. And I think, and Rob and I both talked about that. The reason why it's shut down or diminished at the moment is because people are at home, and the high-end food service market and the data out of China supports that. It does respond quickly. So it absolutely will be disrupted. It is already. Will it bounce back? Yes. Will it bounce back quickly and to the same levels? We don't know. The other thing to keep in mind, and it adds to the last question that Rob was answering as well, we export 70% of our products, sheep and beef. So firstly, we can't eat it all. We would love our mates to eat more beef, and more lamb, but they're not likely to triple their consumption at their current prices. But in the global scale, the global market, there's over 70 million tonnes of beef is consumed. So when you think about our high-value premium Wagyu and Angus products, we're talking about a very small percentage of a very, very large market. So yes, it will be disrupted. Yes, it will be challenging. It will bounce back. How quickly it bounces back to the same level, we don't know. Nobody knows. But that market is still there, and we only have to find a small percentage of it. So when I talk about pivoting our marketing programs and activities, that's a big part of now what we have to do. As things are coming back, how do we make sure that our engagement is with the highest quality, highest value customers that we have around the world?
Thank you, Jason. And I might keep you online for this next question, which is, how is the supply chain going into the US at the moment? Okay, sort of okay with your face half screwed up. It's disrupted like so much else that we do. There's been different reports about port closures and activities. There's no ports are closed. There's been reports about containers held up on wharves, which is quite possible. But it's more likely a labour issue than anything else, being able to get access to labour or disruption to labour or movements. The US market is quite disrupted at the minute. I was on a call this morning with the National Meat Secretariat, and the US crew were talking about the disruption in their supply chains, where there's been a disproportionate impact on cattle prices. So they've got a very structured supply chain of cattle going on to feed and cattle coming out the other end, and largely going into so much of their market being food service. So it's very disrupted. Our volumes are still actually going in. We've still got product going into the market, but it is just disrupted and will be. One of the fantastic benefits for Australia is that we go to about 100 markets, and China last year was our largest market at over 200,000 tonnes. 10 years ago, China was less than 10,000. So we have the ability to move big volumes of our product around to different markets, and we have the trade luxury of having 4 or 5 really high quality, high value markets or growing markets. And if you put Korea into that bucket, China into that bucket as well, but between Japan, Korea, the US, China, markets that can take large volumes of high value products. We then have this next tier. So we have a chunk of high quality product going to the US. So if that that's grown in the last few years, so if that shifts, we've got markets for that to go to. But we also then have this next tier of markets taking large volumes of manufacturing product, as long China's one of those too. So if the US is disrupted from a volume point of view, as you saw on Rob's charts, year on year,
China this year is in front of where it was last year. Now, it's a long way back from where it was last quarter of last year, but we're running ahead of where we were at the start of last year. So the US, yes, it's disrupted at the moment. If that is a bigger issue, then there are other markets that we can go to.
Thank you, Jason. So the next question is, where do the presenters see replacement stock coming from? Will beef cross heifers coming from the dairy industry play a role in rebuilding the national herd? Would you like to take that one, Rob?
Thanks, I would. I think it's a really good question, not just for beef, but for sheep and lamb. Where will the replacement stock come from? How will we build the herds and the flocks? I think the idea about dairy heifers coming across is probably, it may happen, but it's certainly not going to be make the big difference. What I think will happen, and what we've done some modelling, is that when we have good seasons, there is an ability to really breed up, and not just in the north. We know that those cattle, they do multiply quickly when they get good seasons. But we need to see farmers all across the country looking at ways they can do their bit, if you like, to build the herd. Now, we could say, well, we've got to build the herd because we need more beef and we need more sheep and lamb, but a really good motivator is that this is the time when you're farming livestock to be absolutely producing to the best level you can, because there's going to be a lot of money to be made. And so what percentage of your heifers are getting in calf? What do you need to do to get them up to speed so that you're calving in the south here at 24 months? How many lambs are you marking per ewe? What's your lambing percentage? What's your fertility rates? What are all those things? And we are looking at a time where the industry is doing well. We can focus on COVID-19 if you like, or we can focus on our bank balances, and the industry is doing well. So the incentive will be to reinvest in improving our productivity. And one way to do that will be to improve the amount of surplus, amount of lambs and the amount of calves we're getting. Two things that does. One is that you've got more product to sell, and we've heard about what the outlook for the market is, although there are some, clouds on the horizon, but, by and large, we're not calling it the end of the market per se. But the second reason to do it will be that there's a lot of the east coast of Australia that is understocked, whether it be for cattle or sheep at the moment. And so the demand for females, the demand for cows, for heifers, for ewes is going to be strong. And if you have a business that can reproduce itself quickly, and we know there are some herds in southern Australia where every 4 years they can double their size if they put their mind to it, that's going to mean that there's a lot of revenue for those businesses. And that's where we think most of the growth will come. It's a fair point, though, Kathy, because it's easier to, find another million sheep if you've got 100 million sheep. It's difficult to find 1 million sheep if you're starting with 60 million sheep. But, we have what we have, and that will be the best way to do it, I think.
Great. Thank you, Rob. Okay, next question is, will the shortage of supply push prices for live export cattle to a point where they are too high for the export market? Who'd like to take that one?
Kathy, I just make the comment, I think Jason's probably better advice on that, but I just make the comment that the demand for live export cattle right at this moment into Indonesia is very strong. And it's because these export markets rely on our product. We can say what we like about live exports. They rely on our product. We are very important to them. And I think I'll hand over to Jason, but I can see that the price has come back. I mean, it's back from $4 a kilogram for live cattle. So it's not expensive at the moment. And we know that they can pay high prices for them, but it's because we're so important to their food supply.
Yeah,
thanks, Robert.
just add to that,
Jason.
Kathy, it's 100% right. The live export numbers are driven very much by demand in those markets, and they flex with the price they need to pay. So the short answer is no. They won't push to being too high for the export market. The customers will squeal a bit more, but no's the short answer. The biggest issue for them will be getting livestock through the system. So you would have seen some press in the last week about some shipments being a bit disrupted. That wasn't because they didn't want to buy them. It's because they weren't getting livestock out of their feedlots quick enough in those inbound markets.
Thanks, Jason. Okay, the next question is, it's a long one, so bear with me. We are in difficult times, and you mentioned that robust businesses will grow. However, is there a high proportion of livestock businesses that may fall on the back of current drought, fire, and now COVID? The national statistics of return on capital employed for red meat livestock producers has been poor, so can affected farmers continue to hang on?
Well, Kathy, it is a long question. I would make the point, and I don't want to be controversial here, and I don't want to offend anybody, but the recent fires were catastrophic. But as a proportion of livestock that were burnt, it was quite low, except for Kangaroo Island. So the fire impact on livestock businesses wasn't as significant as perhaps the press noted. And I note from the person asking the question, they're very well informed as well. So I am deferring to them. But we're seeing, if you take away the drought, and you can't do anything about the drought. If you're in drought and you were in drought, then that's what you had to deal with. But there is a lot of country, a lot of livestock country that was producing red meat at prices that were better than they've seen before. And remembering, if you're in the sheep industry, you were also producing wool. And up until February of last year, we had 2 to 3 years of extraordinary prices. So the point's made that this natural disaster is a problem, drought, fire, and now COVID-19, if you like. But the underpinning of the businesses, if those weren't the impacts that you were feeling on your business, underpinning the business now has been, strong revenues and strong prices. And if we look at it, I mean, we looked at the Eastern Young Cattle Indicator, we look at the Lamb Indicator, we look at the Mutton Indicator. We're in uncertain times, but there's a lot of farmers, or there's few farmers who have sold lamb and mutton and beef at these prices in their farming time. So there is a silver lining to this cloud. The cloud is there, but we are in relatively good times. And I always hesitate to say that because there'll be somebody saying, "Oh, hang on, you missed the point here," or whatever. But that's where we're seeing this at the moment, Kathy.
Okay, thanks, Rob. Did you want to make any comment, Jason, or happy with that answer?
To add to that, I think our industry is structurally very, very different than it was 20 years ago. Rob made this comment about the impact of this now being an export-driven market, and very relevant to this question. The last 2 years, worst environmental conditions, no demand as far as farming goes. Yet, supporting Rob's comment about the YCI and others, all of our indicators were at or above 5-year averages, and that's something which we've never ever seen in a drought previously. So our industry is structurally different. So previously, even back in the earlier teens in a drought, we had tough year, terrible prices. Whereas we've had a couple of really tough years, but average and better prices. So structurally, we're quite different. So I'd support Rob's comments that our revenue prospects and long term, medium to longer term, demand prospects are as strong as we've ever seen them, and I think we're certainly in a much more positive market environment than we've seen before.
Great, thanks, Jason. Next question: are there other market availabilities for wool other than just China and Italy? Do you think this is the opportunity for Australia to increase their processing of wool? Perhaps we better shoot that one to you, Rob.
I think that'll come to me, Kathy. Thanks. I'm sure Jason's very happy to handle. We'll leave that one alone. It's a good point. The first point is that we just don't know what's ahead for manufacturing in countries after COVID-19. There's no doubt people are starting to exhibit concern about our reliance on China and our reliance on imports for manufacturing. Now, whether that translates to processing wool in the future will be difficult because we really don't have any capacity. So it's almost like we have to start from a greenfield site to get that up and running. The point, though, about in the last couple of weeks, China has actually been the saviour of the wool industry. If China wasn't buying, nobody would be buying, because our number 2 and number 3 customers are Italy and India, and both those countries are totally locked down. So China, we've always bemoaned the fact that we're so reliant on China. I think 80% of our wool goes to China. But there's a couple of things that have changed over the years. One is that of that 80% of Australian greasy wool that goes to China, 50 to 60% of that actually stays in China. Our retail sales in China have really grown. And the other factor is that, going back to the global financial crisis, we skated through that to some degree because of China's appetite for our raw products, coal, iron ore, and those things. Perhaps the wool industry gets a lot of support now because China manufacturing could be the first significant manufacturing enterprise in the world to get back to anything like normality. If that's the case, then they will be demanding wool. There is another sideline, though, and that is that while the Chinese woolen mills are coming back on stream now, they're not getting any orders from London, New York, Paris, any of those places, because they're in lockdown. So it's a complicated situation, but I'd love to see more manufacturing back in Australia, but I think that's unlikely.
Thanks, Rob. Just while we're on the wool topic, I've got a question of my own which came from my husband at lunchtime. He wasn't able to join the webinar because he's actually moving sheep at the minute, but we were talking about wool, and his question was, in the case of wool, is the market volatility simply due to supply and demand, or do countries like China actually control the price?
This is the question asking on behalf of a friend. Look, it's a complex question. We've now got, I think we put out a report this morning saying that this year we have actually sold on average each week 6,000 or 7,000 bales fewer than we did last year. And last year we were about 8,000 bales fewer. So we've been declining in supply. So our view is that wool, I don't really subscribe to the idea that the Chinese manipulate the market. And look, people, probably it's an argument you have in the pub with a beer and it'll go on forever. But I don't think that's right, because they need our products and we're supplying less. What we think is more the fact is that wool is a cyclical pricing product, and we watch what happens to, if we look at cotton, polyester, acrylic in recent times, since 2000, they all peaked in 2018 with wool, and they've all been in decline pretty much on the same trajectory as wool. So, no, I don't think, I'd love to, it's a bit like we often talk about meat versus wool, and one of the advantages that meat has is that, I think Jason mentioned, there's 100 different destinations for it. Plus we have a really strong domestic market for meat. Our biggest market is the domestic market still, but we have this really strong export and really diverse export market. Wool doesn't have that. And if you look at the customers also, wool's been trying to develop this, the activewear market, which they've done very well at, but we're still seen as being at that high end very small player in a big market. I remember when I started in wool, I think we were 4%. Wool was 4% of the apparel fibre market. Now it would be 0.4% of the apparel fibre market, I think. It is just, we've declined in product when the market has grown. And we've talked about this a lot at Mercado, but that's the real challenge for wool in the future. We have to turn around this decline in supply to grow our market. I hope you can pass that answer on to your husband, Kathy.
I will indeed. I won't be able to say it quite as succinctly as you have, Rob, but if he doesn't accept my answer, I'll tell him to give you a ring.
Yeah, that's fine.
We've got just one more question that's come in. Oh, no, we haven't. We've got another one just now. So we've got two more, which is good timing because we're coming to the end. So the next question is, we learn a lot from COVID. So in terms of quick traceability for potential biosecurity outbreaks in Australia, is this the right time for the sheep industry to push for a national individual traceability program to ensure our product maintains its premium status through provenance and product safety?
I'm going to let Jason talk about this if you like, but the short answer is yes, yes, and yes. We have no, I mean, our point of difference in the markets is our integrity, our food safety, our traceability, et cetera, et cetera. This, and we've been on record as talking about this. This should happen. It should have happened when Victoria, in our view, when Victoria led. It should have went national, and somebody has got to push it right now. Jason, I've thrown you in the deep end there.
The short answer from a Victorian committed to individual ID. Absolutely. I was going to say a very similar answer, that it's always the right time. So yes, I certainly agree with Rob's comment on it, but with a great big however, right? Well, two big howevers. We've got to learn from take on board the lessons from the beef side, where you look at the transition and really it's kind of the stalling. So we've got individual ID, but that's all we have. So now we have every animal identified, but all we're really doing is tracking an animal through the system. We're not forcing that to work as a information capture and transporter of information up and down the supply chain. So we've got to learn from that. And we've got to be open-minded about the technology that we use. And I mean really open-minded. We want to have individual supply chain traceability. So we've got to make sure that we don't solve the problem at one point, like put an ear tag in, and convince ourselves that that's going to provide the solution through the whole supply chain. And just for context, I actually sat on the Australian Standards Committee that approved the current technology standards for the cattle tags. So the Australian standards, the 1148 standards, in the mid-90s. Right? So we're all using a smartphone that's been invented in the last 10 years, and we're using this piece of technology to underpin our whole-of-chain traceability system that we haven't found a better idea for since the 90s. Now, anybody who does the quick maths realise that ultimately I'm responsible for this. So I'm really passionate about our traceability systems, and I'm really passionate about us doing them better. And the cattle system's been fantastic. It's been world leading. It's set us up incredibly well, but we've got to get to the next generation of that. Absolutely think we should do the sheep system, but we should be really open-minded about what we use. So we should be looking at all sorts of new technology, facial recognition, artificial intelligence. There's a project that CSIRO did where they took photos of wild-caught fish on a trawler and had a 100% match rate with those fish at a fish market sometime later. Right? There's technologies out there that we can think of that will provide us, with the options for solutions for this. So, long version. The short version was, it's always a good time, Mick.
Can I just add to that, Kathy? We, as producers, we benefit from the fact that throughout the world, we're seen as being producers of a premium product. and we get premium price for it. We get paid for it. It almost, in our view, it means that the obligation is to actually be continually giving our customers the confidence that they are getting something better than they can get anywhere else. And part of it is the traceability, the biosecurity, all that stuff that we can do as an industry that will continue to present our red meat at the top of the range, wherever it's positioned in the world. And that's not even talking about the risks of something going wrong. That's just talking about taking our advantage and just staying ahead of the game, making it difficult for anybody to catch us.
Great. Thank you, Rob, and thank you, Jason. Now, one last question, and it will have to be the last one, I'm afraid, because we're nearly out of time. So just quickly, I think it's a great question because I was thinking about this on myself. The red meat supply chain processing plants in particular are doing an excellent job keeping supply to the supermarket shelves. What happens if COVID-19 causes closure of numerous plants?
I think Jason.
Yep, Jason.
Firstly, remember that we export 70% of our product. So keeping supply to our supermarket shelves, we've got a handle on that in spades. The empty shelves in supermarkets are because the inventory management set up for February and March is set up for less than half of the demand that we saw in those 2 months. The second piece is that we've got lower supply now, and we're always going to have lower supply now. Our projections were that we're going to have 1 million less cattle processed this year than last year off the back of the drought and the increased processing last year. So we had we've got decreased supply. So we could have a reduction in processing capacity with no impact on livestock being processed. However, even if a plant did have a case, all plants that operate have put in place business continuity plans on how they manage or how they would manage and respond to an outbreak or to a positive case. And this is one of the things I was talking about to start with. We've heard people say that if a plant gets a case, it'll be shut down and then that'll be it. And there's no evidence of that whatsoever. What there is evidence of is the steps that the processing companies have taken to manage their workforce. So as a for instance, there's a number of companies that have not allowed anybody onto their plant that have been overseas this year, and they put that in place in January. So the plants are well on top of this and well in front of it, and they have systems in place to manage and respond. But even if there was a plant that had a case, 70% export, and we're back on supply anyway. So supermarket shelves will get stocked. It's purely inventory management if we see them a bit empty.
Great. Thank you, Jason. So that brings us to an end of today's presentations. And so I'd just like to once again thank Jason and Robert for making themselves available and giving us such great insights into the market in these times. Here's hoping prices stay high and everyone can find a silver lining to the current situation. So thank you all for joining us. It's been a great turnout. We've had over 200 registrations, and I hope you've all enjoyed the webinar and found some valuable and useful information to take away. There will be more of these webinars in this series of Better Beef events. We're partly bringing this event to you today because we're unable to bring you the Better Beef annual conference in Bendigo, which happens in June each year in conjunction with the Best Wool, Best Lamb conference. So we've had to cancel that event at this point. So we're hoping to run or planning to run a series of webinars where we can bring the speakers to you, in the comfort of your home rather than travelling to Bendigo in June, which is always very chilly. So there will be more events, so keep an eye out for them. We've got all your emails now through the registration so we can keep you informed. The recording of this event will be available and we'll let you know when that happens. We'll send you a link. And apart from that, thanks everyone once again and enjoy the rest of your afternoon. Cheerio.